Everyone. Good afternoon. First, I would like to thank Teresa Singleton, the Vice President and Community Affairs Officer at the Federal Reserve Bank of Philadelphia, for inviting me to introduce this plenary session, Entrepreneurs Reinventing Cities. And I want to welcome all of you to this, what I think will be a very, very interesting session. Okay, my name is Loretta Mester. I'm currently the Research Director at the Philadelphia Fed. And in a couple of weeks, I will take on my new role of President and CEO of the Cleveland Fed. So I want to take the opportunity to say how pleased I am about the collaboration between the Philadelphia and Cleveland Feds on this program, but also on the strong relationship between both of our reserve banks over many years on community development programs and workshops. Of course, our districts share a state, but we have other things in common as well. We talked a little bit this morning about the industrial mix of our two districts, the evolution from manufacturing to eds and meds and other service sector industries. So I look forward to more collaboration between the two reserve banks on important issues in community development and access to credit, which is one of, as you all know, one of the missions of the Federal Reserve System. Now, I'm using the word collaboration, and that seems really appropriate to this session. It's all about collaboration between the private sector and the public sector in developing America's cities. Now, as an economist, I've been taught, and I've actually, experienced over the years, right, that incentives are a really important factor in decision making, whether it be businesses, households, or governments. And economists have also, we're also taught, and we also believe that the desire for value, right, is a very strong motivator. And it's, in a market economy like ours, that driving force of creating value can benefit not only firms, but also society. So it's all about getting the incentives right and showing how revitalization efforts can be a win-win situation for both businesses who seek a profitable return for shareholders and governments and citizens who want to create productive places to work and live. So there's a body of economic research, some of it done at the Philadelphia Fed, which shows that cities play a very important role in the economy. They can provide a more efficient way of organizing productive activity, business activity. For economists, we call it agglomeration economies. There are knowledge spillovers if you can relocate your business near where R&D is produced, like in university cities. Revitalization we talked about this morning can lead to a more productive workforce and access to better skilled workers. But of course, there are also challenges of being in the city. Congestion is one challenge. Declining infrastructure in many of our older cities is another challenge. And of course, government policies can be a force for good or can also create problems. But talking about is not the same thing as doing. And today's session, we're going to hear directly from entrepreneurial leaders about how they've been able to create value and lead others to understand the benefits of investing in cities, including efforts in real estate development and supermarkets. On a personal note, as someone who spent the last couple of days moving into downtown Cleveland, I can tell you firsthand the importance of things like grocery stores. Something our suburban friends wouldn't even think second about, but when you're moving in, it's a really important amenity in developing a livable and vital city. And of course, government is also an important factor in revitalization efforts. So I have my great pleasure of being able to introduce Governor Ed Rendell, who's going to offer his perspectives from firsthand evidence on the role of government and its ability to partner with business rather than create a barrier to business and community development. And of course, even though I've been asked to introduce him, Governor Rendell really needs no introduction. He's very well known for his years of commitment to public service, including serving 2 successful terms as mayor of Philadelphia from 1992 to 2000, and 2 very successful terms as governor of the state of Pennsylvania from 2003 to 2011. And, you know, as a Philadelphia resident for nearly 30 years, I have benefited firsthand from his hard work on behalf of the citizens of Philadelphia and Pennsylvania. I've been married even longer than that, and I can say that I've enjoyed waking up with Governor Rendell. It's not what you think. Anyway, he's a contributor, right, to Morning Joe on MSNBC. He's offered great insights on the news of the day and also the things that he feels passionate about, which is revitalizing and the infrastructure of America and the importance of having that infrastructure in place so that America can remain competitive. And, you know, how can you not like a guy who titled his book, A Nation of Wusses, right? How America's leaders lost the guts to make us great. I never thought I'd be able to use the word wusses in an introduction. So I'm really happy to welcome Ed Rendell. He's going to moderate the session. And let me also mention, of course, our other speakers up here. We are going to have Jeffrey Brown, who's the founder, president, and CEO of Brown Superstores Incorporated. I should say all the bios are in your book, so please, if you want more complete information on the speakers, refer to your book. Our second speaker, Valerie Bockstette, is the managing director of SSG, and our third speaker is Paul McKee, chairman of McEagle Properties, LLC. So without further ado, let me welcome and bring up to the podium Governor Ed Rendell.
Thanks very much. I pulled a hamstring last night, so I'm going to stay seated if that's all right with everybody. I'd like to tell you I pulled a hamstring playing tennis or basketball or something. I pulled a hamstring making my bed, which is surely a sign of advancing age. But we have a great panel today, and we also have a great audience. Just while we were sitting here, 4 or 5 people came up. Steve Mullen, who was my commerce director when I was mayor. Dave Myers, my deputy chief of staff when I was governor, came up. And Tom Layton, the mayor of Wilkes-Barre, Pennsylvania, who is the epitome of someone who turned around an urban center. And I know there are people just like them in the audience. So we're going to try to keep as much time as possible to hear from all of you. I've got one pre-scripted question to ask our 3 panelists, all of whom bring a different perspective and a very interesting perspective. One, of course, Paul, real estate. Valerie, a corporation that has shared values, that thinks it can do well and at the same time do good. And Jeff Brown, who has been just a model of how you can have a successful business catering to the needs of urban dwellers that have been unmet before. So we were very fortunate to have these 3 great panelists. And we're going to start with Valerie. And Valerie, the pre-scripted question is a good one. FSG promotes a vision of shared values where corporations can pursue their business goal while meeting some of society's greatest needs and challenges. Can you discuss what shared values means in practice, in actuality, and give us some examples of where you think it's worked best? Valerie.
Great, thanks everybody. It's great to be here. As mentioned, I work for a nonprofit called FSG. We're a strategy consulting firm and idea factory, and we were founded by Michael Porter. I'm sure you all wish Michael Porter was here today. We unfortunately have our own summit as we speak, so I will try my best to channel Professor Porter. But we work across issues. We work on education and health. We work on environment and economic development because just as you, we see these issues all as interconnected. And we work across sector. So we help for-profit businesses, we help foundations, we help nonprofits, we work with the public sector because we, just as this event shows, believe it takes all sectors to drive social change. And if you've ever heard the term collective impact, we are those people. So if that you have questions about that. And as you can imagine, when you're founded by Michael Porter of the Harvard Business School, you spend a lot of time thinking about the role of business in society. And we spend half our time working with businesses on their roles in society. And we're frustrated with the status quo in this sort of traditional model that we see of what I would call sharing value, right? We see this model that says businesses should do well over here and then give back a slice. They should do some CSR, they should do some philanthropy, they should give back a little bit. And there's nothing wrong with that. We like it when corporations give back to the community. But that's not good enough. We are not going to make the progress that we need to make in this country when the private sector thinks it should just give back a little bit. Because I guarantee you business leaders are not going to take this seriously if it's just off the side. They're going to take it seriously when it's core to their competitiveness. And so when we talk about shared value, which is what I'm here to represent today, we talk about that mythical win-win situation, right? This idea that companies can actually increase their competitiveness and at the same time create societal progress. Because then it's scalable, then it's sustainable, then it's taken seriously. So how do companies create shared value? We see shared value being created at 3 levels. And the first level we call reconceiving products and markets. And this is about for-profit corporations redefining what they compete on. This is no longer thinking about what product am I selling, but what social outcome am I driving? And I'm talking about for-profit corporations here. And if you sort of think about what that means, think about the difference between thinking maybe in the 80s and 90s, I manufacture cars, to I create mobility. That's a very different company. I create tennis shoes, to I promote wellness. I sell nutrition rather than making food. We work with publishers who used to think they make textbooks, and we ask them, well, are kids learning? And they're sort of like, well, but we make textbooks. It's like, no, are you actually driving learning? This idea of, am I a grocery store? Or am I creating vibrant communities and meeting their needs? You're all of a sudden a whole different business. You compete completely differently, and you're more profitable, and you win. So that gets us really excited. I could go on and on and on in this space. Think about, I sell software, to I help you be a smarter city. Right? These are profound shifts in how companies define who they are, what they compete on. And when we think about the housing crisis, again, there's a big difference between I'm selling mortgages to I'm creating home ownership. And I think if banks had seen themselves in the home ownership business and not in the mortgage business, we would have had maybe less of a mess. So sort of redefining what you compete on is one area where companies create shared value. The other one is really redefining and rethinking their value chains. Really thinking about things like investing in worker well-being. That sounds like a no-brainer, right? But we know sort of in developing worlds, it's taken companies decades to realize if half your workforce is threatened by HIV/AIDS, maybe you ought to invest in that in your community, right? And in the US, when we think about the obesity epidemic, when we think about all these health crises, it actually behooves companies to invest in employer well-being. There's a really big ROI on that. If you're in the hospitality industry and you realize for a lot of folks this is their first job, and I have a turnover issue because they need life skills, there's probably an ROI in investing in your employees' life skills. Environmental efficiency. These are all sort of areas where you look at your whole value chain. First and last mile distribution, transportation, all these issues, where rather than ignoring the problem or waiting for government to fix the problem, companies realize it's in their best interest to fix that problem. And the third area where we see this sort of win-win happening is what we call investing in the operating context, investing in clusters. You guys all know a lot more about clusters than I do, so I won't give you a lecture on clusters. But really this idea is that it takes some common infrastructure. Businesses benefit when they're part of vibrant, healthy communities. And this is an area that's really hard because no one corporation can create that community infrastructure that it needs to thrive on its own, right? This is where collaboration is key. And this is where it's really important that we allow for pre-competitive collaboration to happen, within private sector peers, but also between government, between civil society. And again, we have a lot of examples in the developing world here. We think about a lot of companies driving the productivity of smallholder farmers in Africa, or creating these growth corridors in sub-Saharan Africa. We need that here. Where are our growth corridors, right? Where's our supply chain productivity? And again, this is an area where companies actually invest rather than squeeze suppliers, actually make them more productive. Everybody wins. So we see some great examples of that. So I'll stop there. But again, the idea of shared value is not to share value when you've succeeded, but to actually promote economic development, to promote societal progress through the core business, through your core budgets, your core strategies.
Well, Valerie, thank you, and I think you raised some interesting points. It was when you talk about helping your employees so they're in a better position to help you, it's amazing to me. I don't know how you reacted to it, but when the news spread, and I think this was a little overblown by the media, but when the news spread that companies were reducing their workers' hours to under 30 hours so they wouldn't have to give them health care, it seemed to me not only was that inhumane for companies that were making profits, but worse, it was bad business, because you don't want a workforce that's sick. You don't want a workforce that comes to work late, that has all sorts of problems. And you certainly don't want a workforce that's spending half the time working for you and half the time for looking for a job where they will get health care coverage. It's not good business, and it's not fair, and it's not right. We have some of the biggest corporations in America making record profits, driving their employees down under 30 hours so they don't have to give them health care. Since I've been no longer governor, I have a little LLC that has 5 employees, and I give them health care, and I don't even make them pay a part of the premium. It would never occur to me to not give them health care. It just, as a human being, it would never occur to me to not give them health care. If I didn't give them health care, I would make $70,000 a year more. That $70,000 would not change the caliber of my life one iota, and it would never occur to me not to give them care. Someone who has done wonders for the inner city in the Philadelphia area, and done it also by doing well economically, is Jeff Brown. Jeff is probably the best example of someone who understands that investment in the inner city, in underserved markets, can not only do good by bringing people nutritious food and produce that they wouldn't have otherwise access to, but can make money. And it's interesting, it's a model that Jeff has sort of pioneered in the supermarket industry here, but that companies as big as Rite Aid found out in their business. There's a location in Philadelphia, 21st and Lehigh. For those of you who are Philadelphians who are really old, you'll remember that's where the Philadelphia Phillies used to play. It was Connie Mack Stadium. The stadium was knocked down and raised when the Phillies moved, and the stadium, over the course of time, became a shopping center. Rite Aid reluctantly was persuaded to put a Rite Aid into that area. It now is the highest grossing Rite Aid in the state of Pennsylvania. Interesting. Right smack in the middle of North Philadelphia. Highest grossing Rite Aid in the city. Jeffrey?
You know, what's interesting, listening to the governor and listening to you, you basically laid out almost in its entirety the way we think. We call it different names, but we think that way. And I'll tell you what's interesting about it. I'm not sure I could do what I do any other way. Because when we started the process of opening stores in the inner city, which, by the way, Governor Rendell was critical in that and creating the Fresh Food Financing Initiative. When we started it, there was no book to read, and we started to talk to our customers and community leaders to find out what to do. And they described a lot of the problems that in a conference like this, I'm sure you talk about. And what's interesting, and they even pointed out, I'm not going to be successful running a business unless I think about how to help out in these problems. And a perfect example, one of our customers said, you ought to think about the formerly incarcerated, because a lot of our young men have been incarcerated. And think about this, and this is a customer that explained it to me. Think about this from your business, Mr. Brown. If our people can't get a job, they're not going to be able to spend very much in your grocery store. And very simplistically, it's exactly right. Any social problem that exists that's impacting the communities I serve impacts me as a business. And so the truth of the matter is we are in it together. I mean, traditionally, businesses haven't looked at it that way, but I think you'll find even in more affluent neighborhoods, it is true. It's very, very true. If they don't get a good education, that falls on the business. If they get thrown out of their house, it falls on the business. If there's graffiti everywhere and it causes a downward spiral, that's on the business. So in our place, one of the ways we've been successful is not to consider our 4 walls our business. We really consider our business the community. And like you were talking about, what is our purpose? When we started to hear our customers and saw the impact it has on their lives, it immediately occurred to us we're really not in the business of selling food, but it matters so much we're really in the joy business. And we defined our purpose as bringing joy to the lives of the people we serve. And so it's helped my managers to understand if they have an idea to impact that, we're interested in it. And it's led us to put health clinics in stores, to put credit unions that people with modest means can have accounts and not pay a fee where they otherwise would be preyed on. It's taken us into a lot of different directions. Not one of the decisions looks like it makes sense by itself, but in the entirety, following that purpose, it really has made a lot of sense, and we have quite a large business here in Philadelphia. And I think, as the governor said, I think thinking about business this way, there are other great entrepreneurial opportunities in our country for markets that are very, very underserved. So I do think that there are many industries that could do the exact same thing that we've done and be successful. I mean, there are problems with it. We could discuss what the obstacles are, what government can do, but I also think government isn't going to be the one to solve this problem. I personally believe the entrepreneur is the one that could drive this solution, and we sort of think of it as catalytic entrepreneurship, because it's the entrepreneur that's the one who actually has to do the thing that everyone talks about. And so to me, they should take charge and work with government, work with communities, financing institutions, and explain this is what we could use to do this job. They should be the leader. They should take it on themselves. And if we got one thing out of this conference, I think we need more business leaders that look at their purpose that way.
Thank you, Jeffrey. Jeffrey just opened a supermarket in an area called Nicetown, clearly an underserved area. And I asked him how many employees he had, and he has almost 300. And I asked him what percentage of the employees come from the neighborhood.
95%.
95%. That's a huge shot in the arm for that neighborhood. Huge shot in the arm. Now, our next question is for Paul. And Paul is in the business of real estate development, but he does it in a unique fashion. And Paul, as you well know, older cities like Philadelphia and St. Louis have a lot of vacant land and older housing stock. So how do you approach real estate development in St. Louis? And how do you balance high expectations, high level of need, and limited resources? And if you could describe for all of us the major challenges associated with pursuing development in urban communities, how can those challenges, in your judgment, be mitigated? What's the role of partnerships you need to address those challenges? And what's the role for government and for the nonprofit organizations? It's a lot of questions. But Paul, tell the audience, give them an idea before you answer that of the scope of what you do.
Very good. Thank you, Governor, and welcome from the Midwest in St. Louis and the home of the Cardinals, right?
There you go.
We have a little bit of a rivalry here with the Phillies, right? That's been very, very good. I'm in the community building business, and I'm a classic entrepreneur. I hunt jobs for a living. And what we've done is we've been successful doing it in urban areas, or very suburban areas, rather. I've done the big 1,200 acres and 500 acres around our airport, and then we got branded as a sprawler. And it just aggravated the hell out of me, to be honest with you. So I went to my community and said, if you could find land, I can bring jobs. You can't bring jobs without land today. We brought MasterCard's operations center to St. Louis at 2,500 jobs, average wage, 95 grand. We competed with 42 other cities sitting on 55 acres. If any of you have heard of Express Scripts, a major drug supply company, was born in St. Louis, but they made us compete. Today at 6,500 jobs, average wage 75 grand, sitting on 65 acres. They have another 50 acres under option. So how do you find acreage like that? And I didn't believe that a city could regenerate itself without bringing jobs back into the community.
And Paul, let me interrupt you. When I was mayor, this was a major problem for trying to get developers to come into areas in the city. They said, you've got to assemble a significant tract of land for us. And in Philadelphia, and I'm sure in St. Louis, there's a lot of older housing, row house housing. So you may have a block where there were 20 houses at one point, and only 7 of them are habited at the time, The other 13 are vacant, but you can't come in and just tear down the other 13 because they've got multiple ownership. People haven't paid taxes, some have.
Just
in
finding the
family.
owner.
Just finding the owner is a problem. Go ahead, Paul.
Right, well said, Governor. And to Valerie's point, I'd like to tell my young friends that every time I focused on making money, I've lost more than I've ever dreamed of. And every time I focused on doing the right thing, I've made more than I've ever dreamed of. But I'm not sure where the urban core development fits in there. I'm going to find out. To the Governor's point, I started driving the north area of my city, where it's the worst crime area. And today, as of December 2009, we have the development rights on 1,500 acres that touch our entire downtown St. Louis. In that 1,500 acres, only 9,800 people live today. But prior to that, I drew a circle around it and sent some consultants out and said, if you could get me 50% of the vacant land in 3 to 4 years, I'll start buying, and I think we can do something. Well, that was 11 years ago. The lovely lady in back of the room and I started buying ground, and today we've bought over $105 million worth of land, 2,300 parcels, Governor, and we're buying it 50 foot at a time. And the idea is to assemble it. We never dreamed that we'd tear everything down. You can't do that in urban core, so you got to work around the infrastructure that's there. What Jeff and I talked about, you don't do it with eminent domain. It's written into our agreement, we don't want the right of eminent domain, because in the black community, that's a mortal sin, and I understand it. There's a lot of history that's tied to eminent domain, so we're doing it without that right. But our city cooperated. You can't do it without the city. And then we were very, very fortunate in Missouri to help invent a law called the Distressed Area Land Assemblage Tax Credit, where our state government, we have a 5% Missouri state income tax. And tax credits are the currency we have to go hunt jobs. And the state legislature gave us 6 hurdles we had to jump. But once you jump those 6 hurdles, you would get a 50-cent credit on all purchases, maintenance, environmental and closing costs, and then 100 cents on the dollar for interest carry for 5 years from the date of purchase. That was huge. Because out of all the great bankers, and I like to criticize the bankers because there's a lot of them in this room probably, I only have one banker. They all want to invest in the art museum, and our arts is a big deal, and all the finer things in our community, but no one wants to come up north. And north is where all the problems are. In our 1,500 acres, our state government spends a premium of $25 million a year more than any other zip codes in the entire state of Missouri, which is a huge state. So you can imagine the issues we have there. And in our opinion, you can't just approach one thing. I thought if I just brought jobs, it'd be fixed, but boy, was I wrong, and did this community humble me. So we have 7 goals to build a sustainable city: jobs, transportation, education, which is the hardest one, heritage, because our cities are full of heritage and some real serious heritage, including racial heritage, health, in green space, and then we have a graphic that we show it in the middle is leadership, political leadership, church leadership, business leadership. And our communities have vacated these areas because of the lack of good leadership, and I compliment Jeff and the governor for what you've done. You've made a hell of a difference here.
Well, thanks, Paul. I want you to focus in, and the other 2 panelists, please jump in here. Question about what government can do. When I became governor of Pennsylvania, during the campaign, I went all around the state, some areas that I had never been to before, and I was struck by the commonality, and Pennsylvania is an older state, obviously. I was struck by the commonality in cities as big as Philadelphia and Pittsburgh, as mid-sized as Wilkes-Barre, as small as Shamokin, that there was a lot of abandoned land that had derelict structures on it, and that in most cases had industrial environmental pollution on it. But interestingly, the land was in a good location. The reason we knew it was in a good location was because people developed it at one time. Factories went there because it was near the highway or near the rail line or not far from the central core city. So from learning in the campaign and in the transition, we developed a program called Business in Our Sites. And it was not sites, S-I-G-H-T-S, it was S-I-T-E-S. And we put $350 million away and we made it available to any municipality that wanted to come in, and they either would do it on spec, or if they had a developer who was willing to come in if the land was cleared, we allowed them to borrow money. And they would pay us back, no interest, but they would pay us back. If they sold the land to a developer, we'd get our money back because we wanted the fund to evolve. If they didn't sell the land, if they gave it to the developer, but the developer paid real estate taxes, we'd get a portion of the real estate taxes till we were repaid. And the fund revolved and was active all during my 8 years as governor. It was a tremendously successful program. Now, again, in part because we were such an older state. I don't know if Mayor Layton used any business in our sites money, but maybe he can talk about that when we open it up. But those are the type of programs that were very important. The year before I became governor, the Allegheny County, which includes the city of Pittsburgh, estimated that they lost businesses that would have created close to 12 or 14,000 jobs because they didn't have shovel-ready sites. And we wanted to give all of our communities in Pennsylvania the opportunity to have shovel-ready sites. Paul and then Val and Jeff jump in. What do you think business can do to incentivize this process? You've talked about tax credits. Anything additionally?
Yeah, what I would say is a couple things. One is I don't think, and Jeff mentioned this, I think the entrepreneurs have to be tapped because government programs fit in silos. They don't fit in a holistic approach, as opposed to most entrepreneurs think of it in holistic ways. So I think government has to be the enabler, not the abler. They have to enable and welcome people like us to come into the community. So a good example of that to me would be for the federal government, just like they do in historic tax credits, to match the land assemblage tax credit that we have in Missouri with a federal tax credit. Every banker in the world would take that collateral, and then they'd come back in because there'd be funds available to do what we're talking about.
And the historic tax credit that Paul is talking about came in 1980, in the early 80s, and it helped rebuild older cities like St. Louis, like Philadelphia.
Absolutely.
It was enormously important, and then they did away with it in the 86 Tax Act. And it's come back in limited fashion, right?
It's still there. Yeah, different
Val,
percentage.
You want to add anything to that, this discussion? What do you think government could do?
Yeah, I mean, I do think this point about silos is a really good one, and getting out of them, and realizing that these social issues, first of all, are all intertwined, and business doesn't think about the world in government departmental silos, right? And in order to enable businesses to come at this in a holistic way, and for businesses to be appreciated, again, not just as, what can your CSR department do, but what can your core business do? I sometimes think we all speak past each other, and government and civil society and business are sort of speaking different languages. So I think government can also help bring the right folks to the table and play that translation role and make everyone at the table realize that actually in the long term we all want the same thing. And I think that's a really good role. And I know the Federal Reserve program, the Working Cities Challenge, did a really good job of ensuring that cross-sector collaborations have to come together before you can even apply for funding. And I'll say that again, getting cross-sector collaborations to come together around a common agenda before they are even allowed to apply for any kind of funding is, I think, really powerful.
So right now I have 5 projects in Philadelphia. And those 5 projects represent 1,000 jobs. And I've submitted for an RCAP and other incentives because there's a gap in each one of those projects. So I look at, being the governor almost like being a CEO. It's a similar type job. And I have jobs. And I have a good return on investment for those jobs. So I think the smartest thing government could do is be smart about investing. I mean, it's how much am I going to make or save from this investment? If it's not a good return, I wouldn't do it. But what really is unfortunate is when the return is enormous. And it seems like many governments look at an enormous return and just brush it off. Like they don't understand the ROI on what's in front of them, because if they did, they'd find a way to help out. The second thing is, that way, where I go, I want to say is more of the entrepreneur-led. But what's interesting is a lot of entrepreneurs, they're not as forceful or outgoing. They sort of follow the path of government. And that's the idea of the tax credit is a very good idea. Because what happens is a lot of the business processes are analyze the opportunity. And when you analyze the opportunity in the urban core, there is almost always a gap. Costs are higher.
When Jeff talks about a gap, and again, my guess is all of you know, this is surplusage, but the gap is the gap in putting the financing package together. They'll get a certain amount of bank loan, a little bit of equity, but there's a gap. The banks won't fund the project entirely.
That's right, and the cash flow of the project won't support funding it. That's one of the reasons. And so what happens is if there's a program that's not political, that's mathematical, like the new market tax credit, like the historic tax credits, then a shy CEO or entrepreneur can do his calculations, and if the project works, it's going to end up getting done without a lot of discussion. And I think if we want very rapid improvement, your tax credit idea or similar such programs are a real good idea, because it's still relying on the free enterprise system and markets to move that capital to the most efficient place.
The other program that we should compliment the Obama administration, they've come up with what they call the Strong Cities, Strong Communities program, which is outstanding. And we just got picked in the last round, St. Louis did, in our Northside Regeneration Project. But essentially what ends up happening is you get a federal employee sitting in the mayor's office, one or two of them. And then there's a team in every division of government, and they resource back. And I think Sean Donovan had a lot to do with setting that up. And Governor, and to Jeff's point, Secretary Donovan made a strange comment to us when he learned about our project. He said, strangest project I've ever seen, but I think it can fix the urban core. And I said, what's strange about it? He said, private money went in first. City money went in second. We have a $390 million TIF. State money went in third because of the tax credit. There isn't a dime of federal money in our project. Right. And I do think that's the way it's supposed to work.
Well, and one of the things I think we got to, and the press, and again, has to get away from, is this idea that these programs are corporate welfare. They're not corporate welfare. Do they help businesses succeed? Yes, they do. But the public good that comes from those business succeeding far outstrips the private gain. And understand that these projects wouldn't exist without filling the gap that Jeff talked about. I remember when I became mayor of Philadelphia, we had a TIF statute, but it had never been used. And Philadelphia was at a low ebb. I don't know how many of you remember Philadelphia in 1992. Nobody was investing in Philadelphia. So I started TIFing areas, and I had to get the school district's approval. And the school board didn't want to approve the TIFs because that meant they were giving up 10 years of their real estate taxes. And I said to them, and it got me frustrated at times, but I said to them, don't you understand? You're not giving away anything. Because if we don't TIF this, they're not coming. They're not coming. And understand 10 years down the road, TIF goes and you start getting real estate taxes. In 1998, we did, councilman by the name of Frank DeCicco and the administration combined on giving a 10-year tax abatement for new construction or total renovation. It was unbelievable what that set off in Philadelphia. Empty nesters came in and bought condos because the condos got the tax abatement. They went from paying $30,000, $40,000 a year in real estate taxes to paying nothing. So they could afford the price of that condo. They bought houses in Philadelphia. Young people bought houses and poured the money they would have otherwise paid in taxes into renovation. It was incredibly successful. And everyone said, oh, we're giving up a lot of revenue. Guess what happened? Before you knew it, 2008 came along, and the city of Philadelphia got a windfall of new real estate taxes. So it's not corporate welfare. It makes sense. The public makes back its investment almost invariably. Are there cylinders where the company goes bust? Yes. But for every cylindra, there are 50 success stories. 50 success stories. I was criticized because Comcast wanted to build a building in Philadelphia. They had offers to build it in Wilmington and South Jersey, you name it. We gave them $30 million of incentives for the public portion of the building, the land beneath the building, which was going to have connections to the subways and the train stations, etc. and I was bitterly criticized by the legislature. You're giving revenue to one of the most successful corporations in America. Well, Comcast promised to put 1,400 employees in that building. Today, as we sit here, there are 5,500 Comcast employees in that building. Awesome. Average salary, $115,000 a year. The city of Philadelphia has a 3.7% city wage tax. You do the math. The city has been paid back in spades, And with that, we're going to open it up for questions. And the only thing I request, we're going to have microphones, am I right?
Yes.
Okay. Please identify yourself, and not just by name, but by who you are and what organization you come from. And I'd be disappointed if Mayor Layton didn't say anything. But so you're on the spot, Tom. But anybody, first question?
Governor, while they're getting up to the mic, I think your point is very critical, because even after ample evidence that what you said is true, when a government invests, it gets a return, or so it shouldn't do it. There's still a perception in the general public that it's corporate welfare, and I think that is one of our really big obstacles to succeeding. Yeah. Because if our project has a gap, it just doesn't get done. There's nothing for anybody. So I really think if we wanted to solve the problem, we have to teach the public about this in a little better way.
Oh, absolutely. I remember when we did the TIF program, people were up in arms at first. And then I gave the same short explanation that I gave to you, and I could see people, the light bulb. Oh, yeah. Oh, yeah. So,
yeah.
I can't see because that light over here. All right. Yeah.
How you doing? My name is Paul Smith. I'm a research coordinator at Rutgers University, the Camden campus. So I sort of have a question. I'm gonna give a little bit of pushback to the talk about the tax abatement. Just sort of what type of stipulations, usually, in my opinion, when I read about these things, the stipulations on what's expected of the company is usually not a long list. Whether you're talking about, is it tied to how many employees from the city that needs to be hired, and things like that. And in a place like Camden, which we do a lot of our research on Camden, obviously because our university is located in Camden, they've been very friendly with the tax abatement. But when you look at the percentage of the employees that are employed or residents of Camden, it's usually pretty low.
Well, you're right. You make a good point. In all these programs, there has to be part of the actual legislation has to be what we call in government clawback. So that if we give, let's say, the ABC company $5 million in help to create a building, an office building, and they've promised to employ 150 employees, and they only employ 50, we claw back 2/3 of the money we gave them, which means we have the legal right to go after them and get the money back. And without that, you're right, these programs can easily be abused. So it's important that there be clawback provisions in all of these government, whether they be abatements, whether they be incentive programs or the like. Paul, you want to comment on that?
Yeah, the other thing we're doing today, an awful lot of is not giving tax abatement because it sends the wrong message. So what we'll do is we'll calculate what a fair abatement is, and then we'll calculate what the earnings tax is, the property tax, utility tax, whatever is the pilots and eats on a project. Then we're able to liquefy that on the front end, and put it into the building, which will drive their operating cost on coming in, which sells a lot better in the community, and it makes a lot more sense. So it doesn't look like they're getting something that the public is not getting. But it wouldn't happen without those jobs.
Thanks.
It's written in there.
Excellent question. Young lady? Or...
No, this is Jim Burnett.
Oh, Jim, I'm sorry.
That's okay.
I was looking at, just for the record, there is a lady in a white dress behind you.
Not a problem. I'm the executive director for West Philadelphia Financial Services Institution, and we're actually fortunate to have Jeff as a tenant of ours in West Philadelphia. One of the things, and all of the stuff that you talked about, we actually use. We use business in our sites, we use new market tax credits, we use the TIF, and we have a shopping center that's 341,000 square feet, and it's 100% occupied and has been for 7 years. It created a lot of jobs, but one of my concerns with the job creation and it's tied to the new promise zones and was tied to the empowerment zone legislation, is that it was fixed to the communities that they were, where the businesses were created. And if you're looking to create jobs for the residents in those neighborhoods, why not expand that opportunity to anyone in the city to give them jobs? And that would give the credit to the business regardless of where it is and help to stimulate that job growth for the residents in that community.
Well, interesting. That's an issue that gets debated. But it's important to, when you do something and your goal is to impact the community, not just impact the community by getting better level of services and improved quality of life, but getting those jobs neighborhood. And I would think that, and again, I don't mean to speak for Jeff, but I think the great beauty of having 95% of the jobs from the neighborhood that you serve is that people have a vested interest in keeping that supermarket, you know, first rate, in making sure that there are no vagrants hanging around, in having a sense of pride. And as long as you spread development out through needed areas, that's fine. I mean, look, do we need jobs in Philadelphia? Like lifeblood, like oxygen. But we don't need those jobs filled by residents from Chestnut Hill. We need those jobs filled by residents from the neighborhoods. And, you know, John Street, when he was my council president before he became mayor, he and I would always get criticized for doing too much for Center City. And it was interesting. We made the point you made. Whenever we'd open a new hotel, John Street would call on all of the associates, the employees who were there for the opening. He'd say, how many of you live in Philadelphia? 98% would raise their hand. How many of you live in Center City? 4% raised their hands. And the point he was making is that downtown development is good for the entire city because that's where the jobs come from. And in the end, one of the great truisms of urban life is the best social program, the best crime prevention, you name it, is a job. No ifs, ands, and buts about it.
And, you know, I have to say hello to Jim, my friend, for quite, let's see, about 8 years now. And I remember going to that community before the development, after, and it's a miracle. And I want to expand the store, by the way, because it's doing that much business. But I took Jim's question a little differently, and I think that you could over require things, or require things so strictly that you don't get what you want. So you could be too loose, or you could be too strict. And if I could give an example, there's a concept in New Market tax credits where you could do targeted population, or they're saying you're not in the right place, but you're hiring the right people. And they require proof that of the family income. So to participate in that, I have to convince a person to share with us their family's income. And a lot of times we're hiring formerly incarcerated folks, people that are impoverished, and they're not equipped to tell me that, or they won't tell me that. And so that's an example where that part is a little overreaching, and it's hard to deliver what's asked of us. And so I think it's very important to get business feedback on these programs, as well as community feedback, to have the right balance between getting what we want out of it as a society and not making it so difficult that you can't use it.
Yeah, I think that's a great point. I think the best designed government programs are always going to need tweaking. I love this debate about all the problems with the Affordable Health Care Act. Do you know how many times Social Security has been amended? Do you know how many times Medicare has been amended? You would have to have the National Guard come in to take Social Security and Medicare away from seniors. That's how popular those programs are. Of course, programs should be tweaked. And the key there is for government to talk to business people, foundation people, nonprofit people, and the community. You've got to have that conversation ongoing so you can change what needs to be changed constantly. It's a constant flow. Nothing should be set in concrete, ever. Question, young lady.
Finally, right?
My name is Yasmin Aber. I'm the executive director of a nonprofit organization called Creative Exchange Lab, St. Louis. One of the main things we do, my background is architecture and design, and urban design, and it's really an effort to connect designers, architects, environmentally skilled people to connect with public interest projects. Recently, I saw an analysis on, in St. Louis, there is this chain of supermarkets called Schnucks. Mm-hmm. And I'm also doing an international research on shrinking cities or weak economy cities, legacy cities. And my group has found that if you follow the pattern of in US cities where as the cities declined, the supermarkets left neighborhoods. And it really brings back to what we're trying to combat today, which is called urban deserts in low-income neighborhoods. Now, looking at this huge pattern, what are your suggestions in terms of what we can do or regulate better? That's just one example, or support policies that would keep an eye and regulate so we don't do such a poor job. Perhaps Mr. Brown, I mean, you're a great example.
Well, if you look at the history of what happened, Fox Street's a perfect example of the new store we just opened. There were huge factories there that employed a lot of people. And when the factories closed, that area became impoverished because people lost their jobs. And there was no other place to work. So getting the supermarket there brought 20 other tenants, all the people that serviced the store, and all of a sudden there's over 1,000 jobs created. And it starts to turn the community around. So I think it really does have a huge synergistic impact getting the grocery store back. It left because the poverty came and it no longer financially worked. But then we had to use government to incentivize it. It's really not an incentive, to fix the gap, to get it back. And all of a sudden you see that adding a lot of jobs. And I think the number one thing, the two things, one is I think grocers need to be educated. And we're trying to do that. We speak a lot about this issue in grocery publications. We talk to grocers. I started a nonprofit, Uplift Solutions, 6 years ago, and I think we've worked in about 30 states so far to educate grocers on how do you do this. Because some of it's not the gap. Some of it is know-how. And I think we really tried to spread what we learned. We didn't try to hog it and monopolize it. We tried to spread it to help see this happen around the country. But the second thing is a lot of these projects truly don't work. They truly need someone to mitigate the gap, whether it's a foundation, city government, state government, federal government, or something else. And a lot of the projects that are stuck because there's a gap that's not met. And it's criminal in that it gives society a big return. That's what doesn't make sense to me. As a businessman, if you brought something to me to sell in my store, if it made a return, that's a quick decision for me. I'm going to bring it in because I'm in the business to make money. I mean, I want to help people, but I have to make money too. And I'm concerned about how difficult it is to sometimes get that gap mitigated, and our return to society it's suspended while we're waiting to fill these gaps. So I think we need to think about a more efficient, quicker way to assess opportunities for the public sector and make those investments where they'll give us a big return.
I think there's another point to the question about St. Louis. We're community builders, so what does it take to rebuild the community? I think it takes economic diversity and intersections. Supermarket is the number one example of an intersection point. People of color and economic spread must greet each other at certain places. Supermarket is one, obviously churches and schools, but in the urban core, it's on the sidewalk. So that's a big deal, so your question about it, but I don't think government could regulate to keep a store not like Schnucks open. The other thing is, we were talking about beforehand, I think the supermarket business in our area is changing. You see Walmart going, and I know that's a bad word, Walmart's going to a small solution. Kroger's is going to rulers. Shop and Save went to Save a lot. You have all these in, not Jimmy John, what's the other one that all these?
Trader Joe's.
Trader Joe's. They all are going to a smaller model today, which is about a 25,000 foot store as opposed to a 60, 70, 80,000 foot store, which I think fits the urban core a ton better. So I think we're going to see more of that kind. We're going to see a Schnucks close, but you're going to see more of the local stores open up.
The name is seriously a Schnucks?
Yeah.
Yes.
It's a big change. It's really a big change.
Maybe they should do something about the name.
It's been that way for a long time.
Yes, sir.
They're no Jeff Brown, I can tell you that.
I'm Joe Schilling with the Metropolitan Institute at Virginia Tech. Take us maybe a slightly different angle, which is you're all entrepreneurs. Obviously, you've seen your own organizations change with your sort of philosophies. And again, maybe this is directed more to Valerie since you've seen this across a number of different organizations. But how do you encourage and incentivize entrepreneurship or sort of policy entrepreneurship? You know, we just completed a case study, sort of a shout out to the folks from Cleveland here, of their vacant and abandoned property council. Now, you know, we all know when you get into the intricacies of tax delinquent foreclosure and code enforcement, acquiring vacant properties is really mind-numbing. But this group of really mid-level folks in, you know, government, nonprofits, have been meeting every 6 weeks for the last 10 years, sort of chipping away, incrementally adopting policy. And so they've sort of created this spirit of policy, creativity, and entrepreneurship. But how do we take some of the things that you've all done in your organizations and infuse that in sort of the public and nonprofit side?
Val, you want to take a shot?
Yeah, I'm not sure I fully understand policy entrepreneurship. Can you help me a little?
Well, again, you're talking about people who are trying to take a system that's broken and try to fix it, and trying to use sort of creative approaches outside of usually the confines of government, right? I mean, they may be entrepreneurs sort of locked in to a particular department or agency, but how do you allow them to flourish and be creative and break out of those silos, right? Look across different systems and sectors.
Yeah.
I call what you're asking, like I said before, catalytic entrepreneurship. And in my place, I feel that I can do it, and I could call Governor Rendell and tell him I don't like the way he's doing something, I'd like to change it. And I've had a fair bit of success with it at all levels of government. But that's really a hard reach. So I think there's two things we should think about. One is we have a circumstance in which business is normally incentivized or often incentivized for bad behavior. Mm-hmm. You make the most money when you behave bad, just bad enough to not break the law. And I think in many of those cases, whether it's the environment, whether it's your policies of how you help a community, your social policies, I think we should think about how to change that around so there is an economic incentive to behave well. And I think that we've been very slow in our country to make any changes in those areas. Like, I would rather give an incentive to someone who doesn't pollute than someone who does, but that's not how it works today. I would rather give an incentive to someone who hires the formerly incarcerated, that hires impoverished people. But a lot of times, and I can tell you with direct experience, hiring those employees cost me about 4 times the amount of money I would otherwise spend because of the training costs, because of the school system and all of the seemingly intractable problems. And the public incentives to mitigate that cost are not great. We rarely rely on them to get the job done. So I think our system, from a policy standpoint, could be designed better. And I think the way we need to look at it across sectors is we need to get to something that's going to have a logical outcome we want, and we don't have that today.
Yeah, and I think building on that, you know, this sort of idea of value creation, right? And I think, as you've talked about, corporations create so much value, and we don't have a good way of capturing it, particularly when they're purpose-driven. You know, so I think corporations talk about, we've hired this many people and we've paid this much in taxes, right? But if you are creating vibrancy in your community, and you're all of a sudden getting folks banked, that were never banked before. And you're all of a sudden getting folks access to healthcare advice they've never had before, and nutrition they have never had before. Sort of that value you're creating goes above and beyond the taxes you've paid and the folks you've hired. And we actually don't quite know how to capture that and value it and monetize it in a way that we can then incent and reward that behavior. We're really good at slapping the risk, and we're really good at regulating. And often when you regulate, it turns into bare minimum check the box activity. Yeah. And this stuff is hard. What you're doing is really, really hard, and it takes a lot of innovation. You know, we joked before about Walmart saying, this is too hard for me, and like throwing their hands up. And we don't incentivize that hard work and that innovation because we have sort of no way to value it economically. So I think that would be a really interesting future area. Like, how do we quantify that additional value you're creating that's above and beyond what we capture today, and how do we incentivize you to do more of that?
And I guess the one other thing is, historically, we haven't really educated businessmen to think this way. Mm-hmm. I mean, historically, if you went and got a Harvard MBA, right?
Yeah.
They taught you to maximize profits, and they didn't
in the short term.
Right, and they didn't teach you to maximize the society.
That's right.
Overall benefit, and I think we need to reform that at sort of all levels of education.
Jeff, you'd love our logo. Our logo has two arrows in it, IQ and EQ.
Yeah.
Social value, economic value. But we say if you don't have the soul for this, don't waste our time. I would answer your question a little bit different. I think we got to segregate entrepreneurship. Entrepreneurship that my kids or my grandkids are getting to see in the suburban kind of environment, and entrepreneurship in the urban core is really different. A wise man once said to me, the most significant piece of the American economy is the family-owned business. In the urban core, they aren't seeing those families owning businesses. So I'm always fighting with the educators. Is entrepreneurialism, I'm a classic one, is it taught or is it caught? And I think in a lot of cases it's got to be seen. So in the black communities, particularly in the poor communities, they're not seeing family businesses. They're not seeing startups. And what we're trying to do is we've created an incubator in the middle of the worst area of our city. Again, it's going to be public. It's going to take public subsidy to help get it there. But to show entrepreneurialism and to get these small markets and those kind of things opening up.
All right, we're going to take last question, I think.
I like that idea.
Last question.
Thank you very much.
A lot of pressure to make it a good one.
On that note, I'm Jean Horstman. I'm Chief Executive at Interrise. We're a nonprofit based in Boston, working in 40 cities across the country, growing local clusters of established small business owners in low to moderate income communities. We have a job creation rate of about 75%. We have a local hiring rate of those 75%. Roughly 75% are created locally. We're building assets, we're building leaders, and we're creating jobs. And we're not doing it one business at a time. We're doing it by understanding that business is a social activity, and by connecting small business owners, whether they're B2B, B2C, or doing government contracting, in relational networks that allow them to leverage the local economy and integrate it into the regional economy. My question for you all is, how do we do more of that in more of our low-income communities? Was that good enough?
Sure. What I would say to you is too many of us have gone at it 2 blocks, four blocks at a time. And we use a phrase all the time that you got to match the regeneration to the blight. So if you got a big area, you got to think big. And how many of us in our cities have gone in and tried to fix 2 blocks, 4 blocks, and 10 years later it's worse than it was when we started. So you got to match the two. So to me, it's about thinking bigger, in government and business partnering in a different way. Then entities like yours can make things happen in a better way.
I should say our secret sauce is not about money at all. It's about education. It's about what Jeff said, shedding and sharing know-how, and in making know-how accessible in a structured way, providing people with knowledge and networks that they need to leverage that growth. We have 2,500 businesses across the country, and our local clusters are usually about 100 to 150 businesses.
So we actually have some experience with this, because I happen to think what you're talking about is the answer. And we've incubated a couple dozen businesses to serve us. If I could give you an example, we discovered that we had Western Africans that live in some of our stores, but we didn't know what they eat. We didn't understand. We talked to them and they were saying things that I never heard of before. And so we got one of them and we put him in business. And we gave him a purchase order to buy the products we needed, and that purchase order allowed him to get the credit to import the products, and all of a sudden we have a small business. And it wasn't really about money. It was about us having a trusting relationship. Me giving him the purchase order, I think we even advanced some money up front so he could buy his goods. But the truth of the matter is, one of the things that held him back is he really doesn't understand how to do business successfully here. He doesn't understand how insurance works, how would you receive, how would you bill, what kind of margin do you need, what's the best logistical system. And there is support, and there is a little money could help, but really support is a really big issue. And I like the idea of clusters. I mean, if you look at micro-lending successes around the world, they work better when there's clusters. And I think that there is an opportunity in our country to use that kind of system, and we would love to do it. We would love to have a fund where we have a fund office right in the store, and entrepreneurs that wanted to provide services or goods to us, we could evaluate and finance, because I think there is a lot of opportunities. And when the people become entrepreneurs and build their own businesses, that takes a life of its own, and it makes our own success. So I think it is a big part of the solution to what we need.
Yeah, and I've known Jean for almost 10 years. Hi, Jean. So talk to her. What she does actually works really well. And I think what you do is the dream of every banker and impact investor in the room, because we talk to a lot of banks who want to invest in communities, and we talk to a lot of folks who are interested in impact investing, and they keep saying there's no deal flow. You know, these entrepreneurs are not investable, these small businesses.
Can I give you my phone number?
Yeah, I do.
Right? And actually, you're creating that deal flow for them. You're everyone who's got money in this room, you're their dream, because you're actually creating that deal flow for them. So talk to Jean.
You know, I guess one other thing that's interesting, most institutions, especially large institutions like banks, make their decisions based on decision matrix or some kind of very rigid system. And I found that a very small amount of money is the difference between having a business or not having it. They'll lend them 80%, the entrepreneur has 10%, the missing 10% is why that business doesn't exist. And from our perspective at our nonprofit, we would love to have a social mezzanine fund to finance that 10% and get that business going.
Very good. In our economic stimulus program that we put in place in 2003, we did have a mezzanine fund specifically for urban redevelopment. So, but we've had a lot of good ideas. Let's thank the panel.
Thank you all for your questions. Just two quick reminders. One, day one evaluation forms are in your binder. We'd appreciate your feedback, and if you drop it at the registration desk, we have a little surprise for you. Take advantage of it. The second reminder is that we have a reception upstairs on the 33rd floor. Again, there'll be staff outside to help you get there. We hope you can join us for some drinks, some food, and some good conversation. Thank you all for a very successful first day.